Hello everyone, welcome to one another episode of weekly sectoral analysis. Well, the closing of the previous week has been pretty nice, has been encouraging, and you can see this big green candle at the end of the week on the Friday. But before that, we had a lot of consolidation happening. In fact, last week we had this correction from 24,530 to almost 23,800. And after that, we had this couple of pullbacks and stuff. Why did market was able to stabilize in this zone? The main reason for that is this particular support. यहाँ पे एक बहुत बड़ा upside gap है, which is between 23,800 and 23,600. This is what is one of the main reasons. And recently there was, I think so, 4-5 days back, or I think near the start of the last week, there was a little bit of news about the starting of the war. In fact, that particular fear is not yet over, but it is very good to see the way Nifty has been able to keep that news at the sideline and give us a short-term consolidation breakout. I'm talking it as a short-term consolidation because this was a consolidation and it has been given a short-term breakout. Now there are few resistances over here. You can see this upside gap is a resistance, then this high is a resistance, 24,480, then 24,600. But the way the breakout has been provided, it's probable that market Nifty will try to surpass all these levels and go higher. In terms of trend and momentum, the weekly chart seems to be positive, daily chart seems to be improving, and things are looking even more interesting now. Let's hope so it continues the same by the end of the next upcoming week. Bank Nifty also continues to be pretty strong. In fact, the weekly time frame chart of Bank Nifty is even stronger. It has a little bit more dose of volatility, special thanks to the PSU banking space. But apart from that, in terms of displacement of moving averages and everything, then I would say in comparison to Nifty, Bank Nifty is even more stronger. Trend and momentum is also positive. You can also see that there was a sort of support over here, which was a 38.20% Fibonacci retracement in Bank Nifty, which has worked pretty nicely. Even in Bank Nifty, it has been able to provide a short-term breakout, and chances are the way it has been able to provide a breakout, we could see higher levels in the upcoming week, at least in the first couple of days. PSU banking space. Now here is where things are getting little bit strange and interesting both at the same time. ध्यान से सुनिएगा. When you look at the weekly time frame chart, you will see a correction, a rally, a correction, again almost at the same level, correction, rally, correction. Now this correction is higher than the previous one, okay, and we haven't been able to surpass this as per Dow theory. Apart from a very big heavyweight stock in PSU banks, almost everything, either it is looking negative or either it is looking sideways in terms of trend and momentum. So there is hardly one or two stocks which are looking positive in the PSU banking heavyweight space. If those heavyweight stocks rally and if other smaller stocks in PSU banking space, they follow through the rally, then probably the overall state of trend might improve in PSU banking space, or else I have a question mark on the same. Okay. Private banking space continues to be one of the most heavyweight sectors in Nifty, which is responsible to pull is the right word, to pull Nifty higher. Even over here, I think the Fibonacci support has worked pretty nicely, 38.20% retracement. In fact, this retracement is so strong that it was coexisting with the previous high, which was probably around in the starting of the April 2026. And almost all the stocks in private banking space, apart from a couple of stocks which are mid caps, almost all are looking positive. Now, there were, I think, recent few results which were announced on Friday. Now, how were the results? I have no clue. But the way charts are looking, it's possible, apart from short-term volatility, things overall look nice in the private banking space. Oil and gas space. Oil and gas space, if you can look properly, you can see this short-term rally in the last 3-4 days. Even over here, the last week was a spinning top with the upper and the lower wick. Now, this sort of candle is generally a type of candle which is extremely tired to go down, which is probably near a support, and it's trying to pull market on the upside. Now, if you see one or two stocks which are the mid caps, which are having lesser weightage in oil and gas space, are ready to move higher. But few of the large cap stocks, out of them, one is trying to come out of its downtrend and one is just giving a pullback in its downtrend. So as a trader, will I be interested as of now in oil and gas space? The answer is no, but I will surely keep an eye on this sector, because if those mid caps stocks continue to rally, along with that the large cap stocks also rally, then the overall state of trend in the oil and gas space might change. Autopack, when you're looking at the daily time frame chart, you might say that it's in an uptrend, but it's way too choppy and it's a bit in a range. The answer is yes, it's in a range. But the trend and momentum in the weekly time frame chart is positive. Not all the stocks in the auto space are looking positive, but dheere dheere se one or two stocks or maybe 2 to 3 stocks are trying to improve their state of trend. It's not a blanket view, but the way things are happening, auto space is surely giving it a shot. It's surely giving it a try, that it's trying to improve its state of trend and trying to rally. Now, will it be successful or not? It's very difficult to say, but it is better than what it was probably in the May of 2026. It's trying to do better. Consumer durables, I should say, it's very respectable the way it has rallied. You can see from this low of 35,950, the way it has rallied, it's pretty nice. It has been able to provide a range breakout, which I was talking since many weeks, because consumer durables has been very, very volatile. And this breakout was very important to break this particular range. It was very important. As a short-term trader, swing trader, as a short-term trader, I would say that currently the trend is up, the momentum is up, but it is overstretched in the daily time frame chart. You can also see RSI is above 70. I am not saying that it will not continue to rally. I'm not saying that. But if you are a trader who has not been able to participate in consumer durables, it makes sense to wait for a better opportunity with a better risk reward ratio. But overall biasness, trend momentum seems to be positive in the consumer durables. Consumption pack also seems to be improving slowly and steadily. It's a very slow horse in comparison with consumer durables, but yes, it's making progress. You can see higher lows, you can see higher highs, volatility is crashing and things are improving. So overall consumption pack also looks nice. Finance pack also recently it has consolidated, and when there was negative news about the war, it did not break this support. Again, at this 38.20% retracement, we had a support of this previous high. It did hold on. It's trying to move higher. Now, see, finance pack बहुत बड़ा है. Finance pack में बहुत सारे stocks हैं. If you open the sector, you will not see all the stocks are trying to rally, but slowly and steadily you will see one stock, two stocks, maybe 4 to 5 stocks, they're trying to come out of their consolidations, or they're trying to come out of their downtrends, and they're trying to rally. This is a good sign. It's still not as strong as private banking space for sure, but it is still giving it a start that let's improve the overall state of trend and let's go higher. So it's good news overall for the market. FMCG, I would say it continues to remain flat, and I have no view on this sector whatsoever. IT space, I think a couple of weeks back, despite having a hammer, it was showing a downtrend and momentum, but after that, suddenly it has been able to give a pretty nice pullback. But if you see, most of the times, whenever IT space has been trying to give a pullback, it has always seen a follow through sell-off. What will happen over here? I have no clue. But I have seen one thing: out of 6-7 heavyweight stocks, or at least 5 heavyweight stocks, I can see at least one stock which has tried to rally pretty nicely. Will other stocks follow through? I have no clue whatsoever. Even if you have a look at the monthly time frame chart, it's a pretty good candle. But this candle is yet not complete. We still have, I think, 10-12 days for this particular month to be over. So as per the monthly time frame chart, this is just a pullback. As per weekly time frame chart also, this is just a pullback. Yes, it's good to see that the IT space is trying to rally. It's helping Nifty to stay higher, but will it be able to come out of a downtrend? Will it be able to start a new uptrend? That is debatable. वो सिर्फ टाइम के साथ ही पता चलेगा. ठीक है? Infra space, again, no change in my view. State of trend positive, no problem. I should say, जो इसके large cap stocks है ना in infra pack, they are bullish, no doubt, but they are pretty choppy and they are a little bit volatile also. But the mid caps in the infra space, I think they are trending pretty nicely. And as a sectoral index also, if you're a momentum trader, you will not like a sector which is, staying sideways. It needs to move higher as fast as possible. That's very much required here. Let's see what happens. Okay, metal pack is tricky. The reason for that is now the trend momentum is down in the weekly time frame chart, and also it is near a support, which is a previous high. I'm repeating, the trend momentum is negative, but the price is also at a support. अब ये दोनों बातें एक दूसरे से अलग हैं, विपरीत हैं. So as a trader, when you're having something in front of the chart which is not matching, as a trader, I would like to stay away. As a trader, I would only like to trade a particular sector and a stock where I have complete clarity. If I do not have a clarity, if I'm confused, it's better not to trade, because whenever you will try to trade a sector or a stock when you're not having complete clarity, there is a very high chance you will not get the desired results. So probably as a swing trader, I might try to stay away. As a trader who is looking in a different way, as a trader who is probably looking at cash market trades for medium term, I would surely give it a thought to the metal pack. So as a swing trader, it's a different thing. As a positional cash market trader, it's a different thing. But again, please be very, very careful. The main reason for that is, if you see this rally in the metal pack, it has a habit of rallying, coming back, okay, trying to touch the averages again over here. This time it's trying to touch, but it has not been able to do so. So if this support breaks and if it cracks down, it might happen. So be very careful if you're trying to trade in the cash market with a view of 3 to 4 months or probably higher. Be very, very careful. Pharma pack, one of the great outperformers recently, continues to remain in an uptrend and in an upside momentum. Only thing is it's slightly overstretched in the weekly time frame chart, slightly, not much, but overall biasness continues to be up. PSE sector is weaker. Overall, it looks weak, trying to continue to trend on the downside, but it lacks, I should say, the speed with which the price is falling. See, momentum is there, but the speed with which price is falling is missing. You see this correction. I'll compare this. You see this correction and you see this correction. Both are completely different. Over here, you will see fast correction. Over here, you can see very slow and steady. So that is one thing which is different, but otherwise overall, it seems to be weak. Real estate, one of the most outperforming sectors recently. And I should say one thing, that it has rallied a lot. We do have a negative divergence in the RSI as of now between the price and the 14-period RSI, the normal RSI. And is it a strong divergence? The answer is probably not that much. But yes, I should say one thing, that in the weekly time frame chart also, it looks to be slightly overstretched. If anyone is holding long positions in the real estate sector, I think you can continue to hold them. Just make sure that you are trailing your stop losses at proper levels. If your stop losses are hit, get out. If they are not hit, continue to hold. India defense overall continues to remain in a strong uptrend. Recently, it gave a deeper pullback. Post pullback, it is possible that it can give an up move. Let's hope for the best. And if you want to check for immediate supports, then yes, it was at 50% retracement, the India defense sector, and this 50% retracement was also coexisting with a previous small high. So overall, yes, it is at a decent level. Let's hope for the best. Midcaps. Midcaps also look strong. Trend momentum continues to be higher, but it's not moving very fast. That is one thing which is lacking, but overall things are okay. Before I end this week's video, I would just like to share that things are improving surely in Nifty, Bank Nifty. Few other sectors are also improving. The sectors which are weak, like metal, they have corrected a lot. FMCG is not showing any signs. It is having flat trend and momentum. IT, which is still weak, it's not strong, but it's trying to pull back. So as of now, it's trying to help Nifty. उसके बाद क्या होगा मुझे नहीं पता. I don't know that it will go higher and then again topple down. I don't know. But so far in last 3 weeks, it has helped Nifty, which is a good sign. But I would still say that apart from the private banking space, which has been the predominant main sector which has been responsible for this rally, obviously other sectors, other stocks are also responsible, but we need one or two sectors more which are heavyweights and which can pull Nifty higher apart from the private banking space. All right. So I hope these videos are helpful for all of you. Trade less and trade wisely. Thank you.